Good morning, it's Tuesday 23rd of November. I'm Tom Elliott, this is my market report. Now, stocks last night on the Dow were hit reasonably hard. The share market was down around about 0.25% at the end, but they were down a lot lower earlier on. A lot of nervousness about what's happening over in Ireland. The country has now formally requested a massive bailout from both the International Monetary Fund and the European Union. The potential size of the bailout is up to 70 billion euros, which is 100 billion Australian dollars. And of course, the fear is that if Ireland needs this bailout, then Portugal, Spain, and other countries won't be very far behind. Now, questions are being raised to the extent to which the EU can keep funding these sorts of bailouts, and as to whether the wealthier countries like Germany and to a lesser extent France will have the political will to keep paying this sort of money. Anyway, at the moment, Ireland is going to get a lot of money, but it's also going to lose control of its own taxation system, and that's what the Irish fear. So, notwithstanding this, November thus far is turning out to be not a particularly good month for shares. All sorts of corporate activity going on in the Australian market, though, despite this. Now, QRN, which was the big float that went off yesterday, was priced at $2.55 for institutions, $2.45 for retail shareholders. There haven't been many floats or IPOs in the last couple of years. The ones that we have had, like Myer and Kathmandu, haven't performed particularly well. But QRN, contrary to a lot of people's expectations, actually has had a good 1 and 2 day performance. It closed yesterday at $2.65, so that's a 20% stag profit for the retail investors. And this morning is trading at $2.70. Apparently the interest in the stock is more from overseas than from local institutions. In Channel 10, there's just more corporate activity swirling around. Now, the stock has been pretty strong the past week, and it emerged last night that iron ore heiress Gina Rinehart, the daughter of the late Lang Hancock, has bought a 10% stake in Channel 10. Now, we just need to remember that James Packer, about a month and a half ago, bought an 18% stake. He's negotiating with Lachlan Murdoch to share or possibly sell half that stake to Lachlan. And now you've got Gina Rinehart buying a 10% stake. Bruce Gordon, who owns Win TV, has between a 14 and 15% stake in the company. So there's some pretty powerful, big and well-connected interests, all centring on the last pure listed free-to-air TV broadcaster in Australia. I'm still a bit suspicious about the financial prospects for free-to-air TV. The Freeview digital channels are actually doing better than expected, but the internet looms large, and on that, of course, we can turn to Telstra, where the issue of whether or not the NBN is going to be built is still being debated in the federal parliament. The government, for reasons that I cannot make sense of, and I'll talk about this with Dad, is still refusing to publicly release its business plan. Now, it may yet do this, but questions being raised, well, what have they got to hide? Anyway, Telstra shares are actually a bit stronger. They hit a record low last week of $2.55. They're currently $2.70, coincidentally the same as the QRN share price. And some people are saying, well, if the NBN doesn't get up, that's good for Telstra. But if it does get up, well, Telstra gets a $9 to $11 billion payment. So we'll see. Anyway, Telstra shares are only 15 cents off their record all-time low of $2.55. You've got to remember the original T1 float back in the 90s took place, I think, if memory serves me, around $3.40 a share. So the share price is lower after more than a decade of being publicly listed. So we'll see what happens there. Now, the only other really big corporate issue is that the AXA board has finally unanimously recommended AMP's bid. The bid is $6.43 shares. It's a mixture of, $6.43. You get a mixture of AMP shares and cash. You're protected against a fall in the AMP share price down to $4.50. Effectively, AXA's French parent, AXA SA, will underwrite any fall in the AMP share price to that level. And should AMP rise above $5.60 between now and the deal's completion, which is expected to take place in March, April of 2011, if the AMP shares go above that level, you'll share in some of the upside. So it seems almost certain that AXA and AMP will finally merge. The government has pre-approved it, the ACCC has pre-approved it, there's no Foreign Investment Review Board issues, so this is probably one of the more likely big takeovers to actually complete in the next few months. I'll be back next week to talk to you again.